Now, the next section is on the Augusta rule, kind of the misnamed, weird named part of the Internal Revenue Code in 280A. If you read 280A, which I strongly recommend you do, it's got a lot of stuff in there about all kinds of things like home office and everything like this. But hidden in there is the idea that you can rent your personal domicile out for up to 15 days a year, tax exempt. One of the few places in the code where it says, please don't report to us your income. Not rental income has to go on Schedule E. Not income from your business comes on Schedule C. No, please don't report it. Pretty dope. Now, there's a bunch of provisos that come in with that, which I'm going to explain to you in a minute, but I'm excited to be able to share with you my favorite teaching, my favorite training on how the Augusta rule works, not only for you as a homeowner, but also for you as a business owner. Let's roll. With that, let's talk Augusta rule. I love the Augusta rule. The Augusta rule is one of the few places where you get to triple dip. The IRS don't let nobody triple dip, except in a couple of places, and this is one of them. For those of you who don't know what the Augusta rule is, I know it says 33.6 in there. That's if you live in a big metropolis. Most people are not going to be able to do that, but it's for homeowners who have a house, and if you rent out your house to anybody for 15 days, the money that you get is tax-free. And when I say tax-free, I mean it's tax exempt. That means the IRS says, we don't want to hear about it. Do not tell us about the money you made. Do not report it anywhere. So this is for homeowners. Can you do it if you're renting? Yes, but I don't think it's a good idea. Go buy yourself a house. So 15 days, of course, is 14 nights. Now, what are the provisos? There's a few provisos. Maybe these slides are out of order for some reason. Oh, well, so where people get excited, not that that isn't exciting. Where people get excited is, what if your company rents out your house for 14 days? Well, could the company write off the money that it paid you? Absolutely. But there's rules. What rules? Now, this is what no one's talking about on the internet, at least not all of them. They catch a few. But if you go look at the Internal Revenue Code 280A, you will see these very, very plainly. These are non-exemplary. You've got to follow them. It's got to be your home. Now, it can be your second home. It can be a boat if you can prove that it's a second boat. It cannot be on Verbo or Airbnb. You can't have the back house rented. No, it's got to be your resident, not otherwise rented. You can have these rental days any old time. They don't have to be consecutive, any old time during the year. You cannot have it be your business headquarters. This is where people get wrong. How do they know it's your business headquarters? Well, because you took the business use of your home deduction, dude. And if you do Augusta rule and business use of your home, what are they going to think? You're double dipping. And that's, again, they don't like that. So it can't be that. Now, there's a bunch of ways we can get around that, of course. But and then obviously, I know this is kind of common sense, y'all, but I just have to say, if you stay the night in a home that you're renting, y'all, that's a sleepover. That's not deductible. You can't deduct a sleepover with your buddies, even if they are in your company. You got to get out of there. You don't have to go home, but you can't stay here, even if it is your home. You got the RV in the yard, or go to their house or something. So now some of you are like, well, that's dumb. Why would I rent my house to a stranger? Well, they call it the Augusta rule. It's not really what it's called. It's 280A. But the Augusta rule, because the theory is that they wrote this code for the good rich folks in Augusta, Georgia, when the big golf course come. And this isn't it interesting that it's just 2 weeks. Isn't that interesting? So whatever, they rent their houses out, they get their money tax free, and they make a lot more than 33.6. But whatever, you would not rent your house out to somebody because you're really living there. This is not your second vacation home in the Hamptons. This is your home. But you would hold a corporate meeting for your company there if it was on official business. Well, what kind of official business? Well, let's talk about that. In fact, you could do it 4 times a year, 3 or 4 weekends a year, plus a couple of days. That's perfectly fine, especially if in your corporation, in your companies, you got family and friends. So this is a high dollar example. But one of the things that we can do is, since the rents have to also be market rents, you can't just say it's $10,000 a night. No, not if your neighbor's renting it for $200 a night. But one of the things you can do is raise your rents if there's an event. Now, sadly, Sterling told me a few weeks ago that the Long Beach Grand Prix is no longer in effect, and I'm sad to hear that because I love that. And during the Long Beach Grand Prix, where F1 racers race on the very streets that we drove on, rents go up 2, 3, 4, 5x to watch it. And if you time your events with other events, your rents can go up legitimately. Just make sure that, you've got a record that is, because the IRS is never going to remember that the Long Beach Grand Prix was when you did your corporate meetings. Now, some of you are like, yeah, but my sister is not going to come and pay me to live in my house. I know, of course not. Your business will, because your sister's in the business. I'm making that up. But let's say your family was, and you needed to have annual meetings, and then you needed to have a corporate meeting of the family for the family business. Perfectly fine. And then you've got a situation where you're like, well, we're going to bring some of our sales reps in, or we're going to bring our clients in. We're going to have a barbecue. We're going to have great. All of this, as long as it majority benefits the business, is okay. Now the rules for business apply. These are not Augusta rules. These are just regular business rules for a deduction. If you can defend it, you can keep it. If it's ordinary and reasonable. So what are the rules, though? These are pretty standard, but let's cover them. Look, if you got a contract, money's got to move. You can't just handshake and go, yeah, it'll be all right. No, you got to move the money. The company has to pay you in your personal bank account. There has to be a rental agreement or a lease agreement, whichever way you're going to do that. You got to have that business activities. You got to have it not so that it's just, we're hanging out because we're in the business. No, it has to benefit the business. It could benefit shareholders. It could benefit salespeople, clients. Has to prove that it was benefiting the business. Of course, we're human beings. The IRS knows that. We can have fun. But again, the majority has to benefit the business. So if you've got a company that's doing 21% tax in your structure because it's got a C Corp at the top, because C Corps get a flat tax of 21%. If it were 33.6, that's tax-free to you, not to be reported by you. And then the company pays for it and writes off at 21%. That's $7,000. You're talking about a $40,000 gain just for having meetings at your house. But here's where everybody goes wrong and why your CPA is terrified, rightly so, to do the Augusta rule, because every time they do it, they get audited or something else horrible happens. Part of the rules of your company to get the deduction is what? Ain't no company getting no deduction unless there's a 1099 to another business or to a person. So they're going to send you a 1099 MISC for $33,600, which means they squealed on you to the IRS. Now the IRS knows you made $33,600, but if you're told not to report it under 280A, what's the IRS going to think when they see your tax return? They're going to know you're not reporting $33,000, and bad things happen. If the company doesn't send a 1099, they can't deduct it. So why are we doing this in the first place? How do we solve this? It gets worse because if you file it, and a lot of CPAs make the mistake of putting it on Schedule E where your rentals go. No, it does not go on your rentals. Very clear, not to be reported. Do you report the health savings account income that you made on your health savings account? No. Do you report the income that you put into your traditional IRA or your 401k? Doesn't even go on your W-2. Nope. This is one of them cases. So if you do it, you could fall prey to the 6702 violation, which is the frivolous filing of forms, and that is a $5,000 charge. That doesn't happen that often, but I also don't want to be looking down the glass at it either, because I've gotten it in the past. So how do we do that? We file on paper and we send a letter. It's, by the way, that letter, a template of that letter is in the IRS forms and letters that you all are getting if you ordered, if you're a member or if you ordered the bundle. And that letter says, hey, check it out. I know you think that we underreported, but this is 280A. It's the Augusta rule. We only rented our houses out for 15 days. This is great. Thank you so much for the deduction. We're under the understanding that we're not supposed to report it, so we're not. But that's why that 1099 says there's a missing 33.6. If we need to do something else, please let us know. Otherwise, if we don't hear from you within 14 days, we'll expect that everything's good. Thanks so much for your service to the country, or whatever you're going to say on the way out. That's how you solve it. Now, what if you file electronically? Well, send them a letter anyway. same address. Hopefully, if you can figure that your local address for filing. Not as good, but you got to do what you got to do. That's the Augusta rule. All the rules that matter most, and why so many people get it wrong. It's very rare where the IRS says don't report something, especially when it comes to income. If you have any questions about how to use the Augusta rule for your business and things like that, please reach out to us at support@incorporateforfreedom.com. We'd be very happy to reach out and possibly even have a conversation with you.